Hello, everyone. Welcome and thank you for tuning into this Your Overseas Home webinar on mortgages in Spain. I'm Richard Way, a member of the Your Overseas Home content team, and I'll be hosting the session. It's great to have you all with us, whether you're watching live or watching our recorded version, which is available through our on-demand webpage on the Your Overseas Home website. So in this session, we'll be getting all the meaty facts about the mortgage market in Spain, including the current conditions there, the value of using an experienced mortgage broker as opposed to going directly to a lender, the different types of mortgages available in Spain, and to get a good idea of the deals that are available right now in 2025 if you're ready to hit the button and go and find a property in Spain. And the other thing we'll look at as well is the actual application process, eligibility, and how you go about obtaining a mortgage. But it's not me who are providing all of that valuable information. It's today's specialist speaker, and that is Simon Staples, a senior mortgage advisor at Mortgage Direct, which is a Spanish mortgage broker with a multilingual team serving the international market. They also have a sister company that serves the domestic market, so they cover all bases in Spain. Simon, who lives in Denia in the Costa Blanca, lucky man, we've just been chatting about where he lives. 20 minutes from the beach and centre of the town. He has more than 25 years experience in financial services. He's fully qualified and accredited as a broker, and he helps all types of foreign purchasers obtain the right mortgage in Spain. Those are non-resident people, whether they're buying a second home or a primary residence or an investment. So welcome, Simon.
Thank you.
It's all right?
Yes, thank you very much for the introduction. Nice to meet you, and delighted to be on the presentation.
Okay, thank you. Just quickly, we've got about 30 minutes for this session. If there are lots of questions and you want a bit more time as the audience, we can do that. Simon's going to kick off with a presentation. He's going to cover off all the key points about the Spanish mortgage market. We also encourage audience participation, though. Having Simon here live and answering questions in real time is a great opportunity, so let's make use of it. If you want to ask a question, you can use the questions tool, which you should be able to see on your desktop, on your dashboard, and then I'll field the questions to Simon at an appropriate opportunity. It might be towards the end of the presentation, but we'll get to as many of the questions as we can. So that's enough from me. Let's hear from the man with all the information, and that's Simon. Over to you. The floor is yours.
Okay, right. Thank you very much, Richard, and thank you, everyone, general public, for coming along to the webinar. It's nice to talk to you and have the opportunity of presenting the company. As Richard said, my name's Simon. I'm a senior mortgage broker for Mortgage Direct, and I've worked for the company now for the last 7 years. I relocated over to Spain from the UK in 2018. And yes, it's been a wonderful experience for the last 7 years working and living here in Spain. And it's been a real privilege and a delight to help many clients that have aspirations to do the same thing, not just relocate, but to purchase holiday homes or investments here in Spain along the way. As Richard mentioned, we've now been in business for the last 20 years. In fact, we're coming up to our 20-year anniversary next year, 2026. And when I first joined Mortgage Direct, I was actually the fourth broker on the team. And we've now expanded to a team of 25, I believe now, where we're all helping the non-resident market. We're very proud that we've got more than 350 positive Google reviews about the service that we've provided. And last year, we managed to complete on a volume of business just over 165 million euros worth of business in completions for 2024. Which is an amazing achievement for our company and really consolidates our market-leading place in the marketplace. So just moving on, I'd just like to cover off a small agenda. I think the presentation will last about 10 or 15 minutes because I'm conscious that we've got around about 30 minutes or so for the overall webinar. And I'd like to give, obviously, members of the public the opportunity to ask any questions that they'd like to go through. I'd be delighted to answer those. So the agenda really just to sort of give you an overview of where things are with the Spanish mortgage market at the moment, just to give you an understanding of what's happening. Looking at getting a mortgage in Spain, how easy or how difficult it is, what obstacles are there, how can we help you as brokers get you approved for a mortgage and get the door keys to your dream home. And then obviously having a bit more of an awareness or an understanding around the eligibility, qualifying criteria for Spanish mortgages and the conditions for those. And towards the end, obviously the benefits of using an independent mortgage broker rather than perhaps going to a Spanish bank directly yourself, to see how we can just emphasize the advantages of using our services. So just to come on then a little bit now to talk about the Spanish mortgage market and the financial situation for non-European citizens and British nationals. I think Spain, as we know, is a very, very popular destination for property buyers. It's really multifaceted. It has the lifestyle that many people desire, whether that's the beach lifestyle, city lifestyle, interior, beautiful countrysides. But I think the main selling point of Spain, as probably everybody is aware, is obviously the climate. It's a huge attraction, especially in the winter months between October and February. And the property market really is quite buoyant at the moment. It's attracting not just British clients, but buyers from all over the world at the moment. And we're here to help with that, to help clients secure a mortgage in Spain. And although there are some challenges and there are stricter requirements that Spanish banks do put on non-residents, there's still a hell of a lot of successful buyers that have gone through over the last 10 years really. So just coming onto the graph, just to highlight that, what I'd like to show you is really the number of Spanish property sales involving a property buyer over the last 10 years. So we can see, we look at the last bar chart on the right-hand side, 2024, we've got around about 92,500 purchases involving a foreign buyer last year. Which was a 6% increase on 2023, and was actually the second highest year ever recorded. We can see a little dip there for obvious reasons, 2019 to 2020 when the pandemic hit, and of course that had a large impact on the number of people that were able to logistically come to Spain and view properties and obviously purchase. But as we can see in 2022, there was a huge bounce back and a massive spike in sales, and that's been pretty consistent since the end of 2022. Breaking down those numbers further, for the 92,500 purchases, the largest groups, nationals buying in that group, were British clients, probably no surprise, followed by Germans and French. They were the top three. However, the largest percentage increases year on year over the last 3 years actually belong to Dutch nationals, Americans, and Polish. So at the moment, we are dealing with a lot of British clients, of course, but we're seeing many more different nationalities come to the fore that are, choosing Spain as their preferred country to either live in or invest in, or use partially as a holiday home. Emphasizing the just go back one slide, sorry, just emphasizing why Spain is an attractive destination. The economy in 2025 is projected to grow by 2% this year, and property prices are expected to rise by around 4% on average this year as well. Appealing rental yields is another huge attraction for investors. We're seeing long-term rental yields of approximately 5.5% in Madrid and Barcelona, and seasonal rental yields exceeding 8% even in high tourism regions such as the Costa Blanca and Costa del Sol. Interest rates in Spain are generally amongst the lowest in Europe as well. And the expectations are from the European Central Bank, the ECB, and the Euribor, which is the indexed reference link rate, are showing further reductions or projected to show further reductions throughout this year, which is great news. The The Euribor has fallen from around 4.25 around November 2023 to around 2.4 today. So that's been continually falling, and it's definitely going in the right direction to make things more attractive. In comparison to the UK's Bank of England's base rate, 4.5%, and the Fed in the US at around 6%, it does emphasise that Spain is a really attractive proposition when it comes to investing here. So the robust economic outlook, the competitive rental yields, the financing conditions really enhances Spain's position as the premier choice for lifestyle and property investment. Just moving on now to the next slide, I just wanted to show you some of the popular deals that are available. Not generally available, I have to say, because the way that things work in Spain with Spanish banks is that the pricing of mortgages is very much down to individual profiling. So there really is not a one-size-fits-all interest rate that applies to everybody across the board. So obviously in the UK, when I was broking there, where you see an interest rate that's advertised, that is generally the rate that you'll get. Here it doesn't work that way. It really does depend on many different factors of a client's profile to determine, you know, the actual rate that they're going to end up with. So as an example, on this particular slide, these are actually rates that I've personally managed to negotiate for clients in the last 7 days, actually. So we're currently achieving mortgage rates as low as 2.25 fixed for 20 years. Now that is subject to certain insurance conditions, such as things like life insurance, home insurance. There may be some other requirements as well in order to get rates that low, but you know, 2.25 fixed for that period of time is a phenomenal rate in the current conditions. Variable options are also available in Spain, which are more flexible. So if clients are looking to overpay capital or looking to clear the mortgage down quicker, a variable rate mortgage may be better suited. And we have rates starting from 0.35% plus Euribor. As I just mentioned, the Euribor is positioned at the moment at around about 2.4%. And you can see the bottom paragraph there. Without life or home insurances, rates generally can be increased by around 0.75 to 1%. So the Spanish banks are quite, they do like to strong arm non-residents when it comes to persuading them to consider ancillary products. I mean, there can be some pros and cons of looking at them, but generally in order to get the very best mortgage conditions, it normally comes on the premise of taking those insurances. Maximum terms of mortgages for non-residents are generally between 20 years up to a very maximum of 30 years. And all mortgages here in Spain are conducted on a straightforward repayment basis, which is capital and interest. So getting a mortgage in Spain, I'm sure everybody wants to know really what are the steps involved in sort of from the initial inquiry through to getting the door keys to the property. So the next slides will just talk you through, there's 12 sort of steps that we've summarized with regards to how we go about helping clients from start to finish. So the first couple of steps are probably the most crucial steps in the whole process for us as pre-qualifiers. So the idea here is step one is obviously we're introduced to the client. Depending on the client's nationality, preferred language, we'll put them in front of the right advisor. We'll ask the client to complete an affordability profile form, and we will get back to the client within 24 to 48 hours to tell them whether there's a good chance of them being eligible for the borrowing amount that they're requesting. If we feel that there is a good chance or there's scope to help them with the borrowing amount that they're requesting, then we will issue a quotation. In fact, it will normally be, if we can, 3 quotations, 3 bank quotations, market-leading bank quotations, so that the client can see the differences between the banks and the offers that are on the table. And we will guide them as to, depending on what the priorities are, how quickly they need to move, how quickly they need to complete, which banks we feel will be the best fit for their particular profiles. If the client's happy to accept a quotation from us, then obviously they would engage our services to work and they would sign our business terms and conditions and pay the first part of our brokerage fee, which starts from €695. Once we have that, We then ask the clients to provide us with all their documentation that the bank will need to see in order to underwrite the application. When we have that documentation, our job then is to collate that information, assess it, make sure it's all accurate to what we've been told, and then we prepare a dossier, a mortgage application for the banks, and we send that off to them. We normally get responses from the lenders within a week to 2 weeks to get the initial approval back. During that period of time, we like to shield the customers as much as possible from bank responses or any objections. So we will answer, the bank's questions and overcome any sort of barriers that the banks put up in front of us to be able to get the successful approval through. We do have a 98% approval rating, which is really good. So usually if we confirm that eligibility works after assessing the fact find, 98% of the time, you're going to get a successful approval. So once we have that initial approval, then the second and final part of our brokerage fee is confirmed to us and paid to us, which is either 0.6% of the mortgage amount that's been approved, and it's subject to a minimum of €1,500. Once we have that payment, it enables us then to carry on with the rest of the process through to completion. And the main part of the next part of the process is getting a valuation of the property done for the client. And that can be done in one of two ways, really. We can either request a valuation, quote, independent of the bank through one of our partner valuation companies or several partner valuation companies, or we can allow the bank's preferred panel valuation company to inspect the property on the client's behalf as well. Once the valuation's back, and fingers crossed there's no issues with the valuation, it's valued up and there's no warnings or conditions associated with it, we then ask the bank to provide the binding mortgage offer document, which is called the FAIN. And at that time also, the bank account is open for the client. 9 times out of 10, whichever lender is going to be providing the mortgage will also request that the client opens up a bank account with the same company, because the monthly mortgage repayments generally have to be met internally. But again, that's a service that we oversee hand in hand with the mortgage application. Once the binding mortgage offer is out and the client's happy with all the terms and conditions and they've understood it, they'll sign that document and it's sent back to the bank. The bank then uploads that FAIN to the what they call the electronic notary platform, which is a huge centralized database that all the notaries in Spain log into and have access to. And once it's in that platform, the 10-day calling off period starts, which is the legal minimum period of time that has to elapse before you're allowed to collect the door keys to the property, allowed to complete and sign the mortgage and property deed at completion. The last 2 steps there are really, you have to have 2 appointments before you can complete, well, including completion, in fact. One is to sign the transparency deeds, which is basically a very short test or quiz that the notary will ask you to go through with him or her to say that you've understood the FAIN, the mortgage terms and conditions. And if the notary is satisfied that you have understood the FAIN, that's satisfied that requirement. And then so long as at least 24 hours has passed after that transparency deed signing, you're allowed then to complete on the purchase. So those are the main sort of steps involved from start to finish. And on average, I mean, each particular situation is different, of course, and each seller's situation is different, but on average, it's about 8 to 10 weeks from the initial inquiry or submission of the application to completion and getting the door keys to the property. Just a little bit of information around certain types of income that is accepted in Spain and certain types of income that isn't. Numbers 1, 2, and 4 on the left-hand side are considered primary sources of income. So obviously we have employment income from your work. That's going to be obviously salary, any bonuses that are received as part of your remuneration and commissions, etc. We have many self-employed clients, whether they be limited company directors or whether they be sole traders. Self-employed income is absolutely accepted. And again, depending on how you're set up as a self-employed person, it will be a combination of things that will be considered, namely salary and dividends, for example, that are received in that category. Pension income is also considered a primary form of income as well. Clearly, we do have semi-retired or fully retired clients that may need a small mortgage to help them with their cash flow in order to purchase properties, and we're able to accept pension income in that regard. And numbers 3 and 5 there on the left-hand side, rental income and investment income, are generally considered by the Spanish lenders as secondary forms of income. So usually 50 to 75% of rental income is considered when underwriting a mortgage application, and investment income can be considered. Some of the Spanish banks are a little bit fussy around that at the moment, but we do have some options to explore for some lenders that will consider investment income coming through. The income that's not accepted, generally any kind of state benefits that are received in your home country are generally not used for underwriting a mortgage. Child maintenance, social security benefits, there are others as well, but generally those are the two that we come across fairly frequently, where we have to say, unfortunately, we can't factor that side of income into affordability calculations. So coming on to eligibility for a mortgage and conditions, so really just talking about what sort of financial profiles make the best applicants. As you would expect, whether it banks in the UK or banks in the US or any country, the lenders are going to assess your income stability and employment history. Salaried individuals should provide pay slips, of course, and employment contracts, while self-employed applicants will generally need tax returns, limited company accounts in order to verify their incomes. The banks obviously have individual eligibility assessments. They have their own rules, internal rules, but as a general guide, the information on the slide here is really what the banks are looking for to put you in the best position. So creditworthiness is a huge thing here. Now, the banks in Spain, they cannot credit check any foreign national electronically. They can only credit check electronically any credit that you operate in Spain itself. So usually a foreign national is going to be asked to provide a hard copy of their credit report from their home country. So for example, in the UK, that would normally be Experian or Equifax. And your credit history and your score are really pivotal, very important in determining mortgage eligibility. The stronger the credit profile, the stronger the score, it really does enhance the chances of getting better loan conditions and getting approved. The debt to income ratio analysis. So the way that Spanish banks work, it's quite different to the way that UK banks, for example, will calculate what's affordable. In Spain, they use a monthly debt to income ratio. And in general, the monthly mortgage repayment on the borrowing that you're requesting should not exceed around about a third of your after-tax income, allowing for any ongoing credit commitments that you're going to continue running with. So the lower the debt to income ratio, the greater the chances, again, of you getting approved and also getting preferential mortgage conditions as well. Loan to value ratio consideration, again, as you would expect, Spanish banks do, by default, they're very conservative, they're very cautious, and they do like clients coming to the table with, a fair percentage of the savings or a fair percentage of the purchase price or value of the property to make the risk of lending that much more smaller for them. That said, the very maximum loan to value for non-residents is usually between 60 to 70%, depending on nationality and fiscal residency. And as you would expect, if you're a Spanish resident or you're paying your taxes in Spain and you've lived and worked in Spain for quite some time, then up to 80%. In fact, sometimes even more than 80% could be achievable for Spanish fiscal residents as well. Stricter deposit requirements. I think we've just sort of mentioned that. So yeah, 60 to 70% loan to value for non-residents. So we tend to find that the line in the sand with the Spanish banks a lot of the time is 40%. If you're a non-European national, i.e. from the UK, the US, they do like to see at least 40% deposit where available. That's not to say that if you don't have that, you're not going to get approved. We have many instances where we've successfully got 70% approvals through for British and American clients. But of course, we have to bear in mind the currency differences. Your mortgage in Spain is going to be clearly in euros, whereas the currency of your earnings, your continued earnings, might be in pound sterling, or it might be in US dollars or some other currency. So there's always going to be that currency risk fluctuation for the banks to take into consideration with what they're comfortable in lending, which is why they always like to, if possible, see a slightly higher deposit than 30%, if that's feasible. Income verification. Again, the lenders like to see continuity of employment. So the longer that you have been employed or self-employed, the better. Generally speaking, if you've got employment history as an employee of more than 12 months, that's good, but the longer the better. And for self-employed clients, at least a minimum of 2 years is really the minimum requirement that the Spanish banks are comfortable with here. Credit checks, we've spoken about that. So again, really, we're looking for really good, clean credit records. As a non-resident purchasing in a foreign country, the Spanish banks really don't want to see or have any kind of knowledge of adverse credit in your home country, or any kind of black marks on your credit record, because that's pretty much an immediate no-no for the banks here, and they're likely to decline you. We do have, when I speak into my clients, and if clients themselves think they're a little bit borderline, or they might have had some adverse information that been put on their record previously, I always ask them to provide me personally with a copy of their credit report, so I can just have a look through it, check what's on there, maybe get an understanding of any sort of mitigating circumstances for adverse credit. And, you know, if there's a possibility of exploring some options to speak to the banks to see if we can get around things, then, you know, we'll always look at the options of doing so. So coming on to the final slides, using a mortgage broker. So the benefits that you'll get by not going directly to a bank. Well, having done this job for 7 years now as a broker, I think the main benefit that I'd say to all my clients that I speak with is the biggest benefit is saving you time. It's just making sure that things get done quickly. Spanish banks can be very bureaucratic. They can check things to the nth degree. We often find that clients think that they're saving money by going direct to the banks, but what we often find is that that involves a lot of stress. There could be language barriers, of course. There could be situations, well, in fact, I've had situations where clients have come back to me at the 11th hour trying to complete on a purchase, where they've said that they sent their application to a bank 4 or 5 months ago. They've not heard anything. And what can they do? And that is exactly what happens sometimes. You know, the bank's frontline staff do promise the earth, but sometimes deliver very little. As a very reputable brokerage now, the biggest brokerage, we actually have main points of contact at all of the banks that specifically deal with our applications, and they fast track our applications for us. So because of the volume of work, volume of business that we've been able to provide the banks with over the past 20 years, they now understand that the clients that we pass them are quality clients. They're likely to be approved. They're likely to have excellent credit ratings without any issues. And they also offer us exclusive rates off the back of that. So we're able to offer, you know, more competitive interest rates and terms than perhaps the client can get themselves by going direct to the bank. Service is also a huge thing. So when you're buying in a foreign country, as I've done myself, I know that there's nothing more reassuring than actually having somebody reliable to help you from the start to the end. It's having communication all the way through. It's hugely reassuring. You can't put a price on that. And that is really the major benefit, I would say, of using a broker. It's a unique point of contact from start to finish. And it's making sure that, you know, if one bank says no for whatever reason, then we've got a selection of other banks that might say yes. And it's not left to the client to go fishing around, spending a lot of, you know, their time, a lot of their money in finding, finding out banks which might lend to them or might not lend to them. That's what we're here for, and that's what we do. So that's the presentation. Thank you very much, everybody, for listening to it. And as you can see there, we have a telephone number for our team, which is a general number to make a note of, and where we're registered, our registered address, our headquarters based in Madrid. You can also follow us on social media, Instagram and LinkedIn, Facebook. And there's a QR code here in the top right-hand corner that if you do wish to scan, that will enable you to contact us individually with your own particular inquiry, and we'd be delighted to help you with that.
Okay, thank you very much, Simon. Very comprehensive, active information there. Really useful. Thank you. And we've got questions as well, which is great. We'll come to those just in a second. We'll work our way up chronologically as they come in. One thing I wanted just to ask you first off was we often use the term pre-approval or mortgage in principle, offer in principle. Now, looking at your chart of the stages of the process, is that what you refer to as a quote?
Yes, absolutely.
Because I was going to ask, when the really important thing for viewers is when they can seriously start looking at properties that they know they're going to be able to afford, which I'm assuming is the point where you give them a quote. Is that right? That's
correct, Richard. Yes, indeed. The first thing that we ask the clients to do for us is complete an affordability form with information. It gives us a nice summary snapshot of their income, their outgoings, the level of savings that they have, their nationality, where they pay their taxes, etc., etc. So if we feel at that stage that it's a non-starter, the profile is not really going to be, we think, getting approved, it won't go any further than that. Hopefully it does go a lot further than that. We will then, if we think a client is eligible, we will then go and have a discussion with various banks and source the market, describe the client's profile to them, and then we'll come back and present some options for that client to consider. And we'll break down the best offers, explain the buying costs, and then ask the clients to consider engaging us. And it's really important that they do that before they make an offer on a property in Spain, because if they make an offer on a property in Spain without having the mortgage agreed in principle up front, they're risking losing their deposit. What happens is that if an offer is accepted by a seller here in Spain, usually within 2 to 4 weeks of your offer being accepted, 10% deposit, 10% of the purchase price has to be paid to the seller, which is non-refundable if for any reason the buyer pulls out of the purchase. Now, the buyer might pull out for various reasons, but one of the main reasons could be that they can't get mortgage finance. So it's absolutely vital in order to protect those deposits and give the clients peace of mind, and not just the clients, but also the estate agents the peace of mind that the client's a serious buyer, they've been pre-approved, subject to valuation, and are ready to go.
And I suppose on the flip side, it works in their favour, because if you go and look at properties with a mortgage in principle, with an offer in place, then the vendors know you're serious, the agents take you seriously, and they know you're ready to go.
Absolutely, yeah. And quite often you're going to be fighting with other buyers. You're going to be up against other buyers that might already have a mortgage approved in principle, may even be cash buyers, for example. So it's really just about, putting yourself in the very best position that you can when you're negotiating with an agent, not only on your personal circumstances, but also on pricing as well.
And you can have all that done from wherever you're living. You don't have to be in Spain to get your mortgage in principle, your offer. So you can get all that arranged before you come over and start looking at properties.
Absolutely.
Preparation.
The earlier.
Let's do some.
Yeah.
Okay. Okay. First question here is from Victoria. She's got 40,000 sterling deposit. She's asking, could she get a mortgage with that? And she's aged 54. So I suppose the first question is, just looking at that, she's got 40,000 sterling deposit. If she's we don't know if she's going to be a resident or a non-resident. What sort of loan is she going to be able to get with that deposit as a non-resident and as a resident? And at 54, what sort of terms and what sort of options are there?
Thanks for your question, Victoria. And first of all, fantastic age, because I'm 54 as well. So absolutely no problems with getting a mortgage at age 54. The maximum term generally that most banks have where the mortgage can run through to is age 75 here in Spain. So you'd be able to qualify for a 20-year term quite comfortably. There is a lender, in fact, two lenders, in fact, that will even go up to the age 80 if it was absolutely necessary. But yes, getting a 20-year mortgage for you wouldn't be a problem. 40,000 in savings in sterling's probably around about 45,000 euros. So if we take an example of a 100,000 euro property in this particular situation, we're looking at 30,000 euros for the deposit. So that's the minimum deposit requirement covered. And then we would estimate around about 10 to 13% of the purchase price to cover your property taxes and general buying costs. So it's probably around another 13,000. So that's going to use up all of the available savings there if hypothetically the purchase price was 100,000 euros. So we would then try and seek, a mortgage for Victoria for 70,000 euros, potentially over a 20-year term. We go away and speak with some banks, find out the best terms for her, present some options, and see if we can get an approval for her.
Okay, thank you. How that's helped, Victoria. Question here from Dennis. He's asked your fees. You quoted fees. Are they? Do they incur VAT or either in Spain, or are they VAT exempt?
No, they're free of VAT.
They are. Oh, that's
yes.
Good.
Yeah.
Dennis asked another question. It's quite a specific one. I'm going to try and relay it to you. As a single buyer who's not married, he's going to be a counter signatory for a mortgage through a Spanish company that's buying a second home. Is that difficult in terms of, it says, will it get a lower credit number, or even will it be rejected? So if you're a counter signatory through a company buying a second home, is that one he needs to come direct to you to answer, or is it?
Yeah, possibly, I would say so. I probably need to know a little bit more background on that. But I think if the question is, can I buy a Spanish property through a company? It is possible. It's not terribly easy to do through a UK. I assume he's a UK resident. It's not terribly easy to do through a UK limited company. There is one bank that will accept it. Usually the way around it, if a client is looking to structure a purchase in a company, under a company, is to set up the equivalent in Spain of a limited company, an SL, Sociedad Limitada, in Spain, whereby your company in the UK, for example, could be the owner of the SL company in Spain, and it can purchase the property that way. If the purchase is structured that way, we actually have many more bank options to explore that will be willing to accept the application, rather than directly from, say, a UK limited company or an American LLC, for example. But the answer in summary is yes, we can explore the possibilities of doing that.
Okay. Dennis has got a very Dutch-looking name, so I have a feeling it might be a Dutch company, or it might be a Spanish company owned. But
could well be a BV like a limited company in.
Oh, he's buying it through a Spanish SL.
Oh, yeah. If it's through a Spanish
company, sorry.
Absolutely. Yeah. We may find that the terms and conditions of the mortgage, the banks tend to require a slightly higher deposit for SL purchases, usually 50 to 60% loan to value maximum with SLs. So the deposit requirements are a little bit higher, but certainly terms and conditions shouldn't be too dissimilar to what we can find for clients on an individual basis.
It's definitely something you can look at. Yeah.
Absolutely. Yeah.
Right. Great. Another good question. I'm glad this has come up. It was on one of my list of questions, actually. Off plan, buying off plan. Stephen's buying off plan, expected final payment of 60% at handover in the last quarter of this year. How far in advance could they get a fee, or what might their options be for that? They've got to pay.
Good question.
Final 60% last quarter of this year.
Good question. The Spanish banks historically don't like to study economic data until the property is nearer construction. So usually when we're around, I would say around 6 months away from the build being finalised, that will be the optimum time then to go and seek an agreement in principle with a lender to get that 60% borrowing that he will need. There is a bank that will actually, there are a couple of banks that will do it a little bit further in advance, but we have to bear in mind that any agreement in principles that they offer are generally only valid for sort of 3 to 4 months at a time. So if we're doing this too far in advance of the build being fully completed, we might have to run that process 3 or 4 times to be certain that the bank's going to lend. So I would say once we're within sort of 3 to 6 months of build completion, that will be the optimum time to approach the bank to find out. That said, I'm dealing with a few inquiries at the moment where the off plans are, the build completion is about 12 months away, and the lenders, because we've got good relationships, they sort of, scratch our backs a little bit to help out, and they allow us to have the agreement in principles for certain situations. It's not commonplace. I would say around 3 to 6 months away from build completion, that will be the time to get the application done.
It's who you know. You've got a good broker with good contacts, it can make a difference.
It helps having the experience. So over the last 7 years, you do build up a lot of contacts. You have a lot of trust contacts at various different banks. They know you on first name terms. You potentially might have lunches with them and they get to know you very well. So yes, another benefit of using a broker.
Okay. Short question, I think a short answer to this. Spanish banks accept American clients?
Absolutely, yes.
You've already mentioned.
Yes,
yeah.
100% yes.
Okay.
American clients are, one of the nationalities that are, increasing over the last 12 to 18 months. Maybe because of geopolitical reasons, maybe because of various other reasons, who knows? But we're seeing a much more larger increase in American clients that are buying in Spain now.
Okay, good to hear. Not too many others. We'll try and get through them all. Emma's asked for a general breakdown of the buying costs that come with, well, a general purchase, but I guess let's talk about the actual buying costs that come with a mortgage. So if you're buying with a mortgage, what are you going to have to factor in on top of what you would?
Yeah, so in total, it was Emma, wasn't it? So in total, Emma, we would say allow for around, depends on whether it's a new build property or whether it's a resale property. So if it's a resale property, second-hand property, we would usually say allow for between 10 to 13% of the purchase price to cover everything, all your buying costs. The main bulk of that 10 to 13% will be the transmission tax, ITP tax. Now, depending on the region in Spain that the client's buying in will determine the amount of tax that needs to be paid. So, for example, if you're buying in Alicante, Valencia, it's going to be 10% of the purchase price. If you purchase in Madrid, it will be 6%. If you buy in Barcelona, it's 10%. If you buy in the Canary Islands, it's 6.5%. So there's different rates for different regions. But the tax makes up pretty much 80-90% of the general buying costs. The other minor costs, I would say, will be costs to your solicitor, your lawyer, for assisting you with the purchase. Obviously, a brokerage will collect a broker fee for assisting with the application. Notary fees and gestoria costs, so the cost for preparing the mortgage and property deeds at the notary. Getting a valuation done on the property will have a fee as well. And some banks have what they call an opening fee or an opening commission. In the UK, it's commonly known as a product fee. And in Spain, that's generally between 0.5% to 1% of the mortgage amount that's being borrowed.
Okay. And did you say you do simulations anyway for clients when they're, so you would actually present all that, would you?
Absolutely. Yeah, so that's part of the quotation that we issue. So all the buying costs will be broken down on the quotation. So it's completely transparent, and we offer the clients an opportunity to speak about the quote via, video conference or telephone call if there's anything that's not clear on there. Yeah, absolutely. It's all written down.
Okay. Just to warn you, we won't take any more questions now because we have run over, but there's a couple more. It'd be nice just to answer.
Sure.
So that where's the one I was looking at here? Yeah, from Mark, in your guide to the process, again, the different stages, there is a step requiring signatures from the applicants. Does that require the applicant to sign those in person in Spain? Or, well, can a lawyer do it who has power of attorney, or do you do it on their behalf? Is that a point where they do need to come to Spain?
Yeah, good question. And you can do either. So obviously many clients buying from different parts of the world, sometimes it's not logistically possible to physically be in Spain on the 2 occasions that you need to be in front of the notary to sign for completion. So a lot of the time, clients will appoint a lawyer in Spain and provide them with a power of attorney document, which is basically a legal document that allows the lawyer to act on the client's financial interests and sign on their behalf. So yes, it's absolutely possible. You can either attend the notary yourself face to face and sign, or you can allow your lawyer to do it under a power of attorney.
Okay. A question about redemption penalties. Are these typically levied by banks on clients, or do they not charge them? What's the norm?
Yes, absolutely. So on variable rate mortgage products that are linked to changes with the Euribor, the maximum early repayment charge can only ever be 0.25% of the mortgage amount for early repayment within the first 5 years. It can't be any higher than that. After 5 years on a variable rate product, the early repayment charge is 0. So variable rate products will be really better suited to people that are looking to overpay frequently or clear the mortgage down a lot quicker than they took the mortgage term over. On a fixed term mortgage, so for example, if you had a fixed rate mortgage for 15 or 20 or 25 years, the maximum charges are 2% for the first 10 years and 1.5% thereafter for the rest of the term. Can't be any higher than that.
Excellent. Brilliant. Right, we are well over. There is another question. I'm going to swerve that because it's not really relevant to this session. It's someone asking about this 100% Spanish property tax for non-residents, which has been in the headlines recently. I'm sure Simon would rather not address that now, but I will say we did do a webinar on this recently with a lawyer, and if you go to the on-demand section of Your Overseas Home, you'll be able to see that. And we'd had a whole half-hour session on this. So Suzanne, if you go to the website, you'll see that there. So that is all about all we've got time for. Again, thank you very much to our audience for tuning in. I hope it's been useful. That's whether you're watching it live or you're watching a recorded version. Do send the link to this to anyone else who you think might find it useful. And of course, thank you very much, Simon, from Mortgage Direct. We really appreciate you giving up your time. I found it really lots of information there. So thank you. A small request from the team here at Yours Overseas Home. If you have found it useful, we would appreciate it if you could leave us a review on the review website, Trustpilot. If you've got a few seconds to spare, there's a link that's just popped up where you can do that. And I have a save the date for you as well, which is the Your Overseas Homes comprehensive virtual event on the 22nd of March. And it's a real-time event on a remote platform where you can speak to people like Simon, but agents, lawyers, anyone who helps you move, buy property, relocate abroad. And there'll be seminars with sessions much like this on the day, addressing all the different topics that you need to know about. And you can do all that from the comfort of your sofa because it's remote, so you can just get on your laptop and tune in. And you can register for that for free through the link that I think is popped up now. Yep, it has. Brilliant. So that's it. Otherwise, thank you very much. Good luck to everyone who is about to embark on a Spanish property purchase. Thank you, Simon, and goodbye. Thank you.
Thanks very much. Thanks a lot. Bye-bye.